Hey traders, today is Saturday, January 7th, and I have a stacked lineup for you guys today. I'm going to first prove to you that the path to the hive, the October 13th, 2022 low, was first paved on December 15th, 2021. Okay, I'm going to show that to you momentarily. I'm also going to tell you which level SPY is going to attempt to go to. It hit me last night when I was looking at the charts. And it is that level where I believe the bull bear line will be. The decision point will be at that level, up or down from there. Okay? And then finally, I'm going to briefly discuss CPI next week. That I think CPI next week is just a means to an end. In other words, they've already made their decision which way they're going to go. And CPI is just a means to that end. Okay? So let's first get into 2021. Let me turn on my laser pointer. 12/15, 2021. There was MACD bearish divergence starting from November all the way until December 31st. Right there. See that? So you remember what you do when you see bearish divergence. Look on the ascending side for the next channel down. The top of the channel that started on 12/15 goes all the way down to the hive October 13th wick low. Isn't that crazy? It was all planned all along, guys. Every single one of these pathways goes back to the hive. Let's get into a little bit more how that was determined. Okay, so earlier you saw this was price action going up, but down below you saw MACD going down. Okay, so you therefore choose the ascending side. It was this one. This wick connected with this wick. That was an identical action that I took when I connected the August 16 high to the October 13th, the hive low. Exact same idea. I just connected that wick to that wick. That's it. And let's just kind of go down here and see how the wicks respect this line perfectly. Right here, right here, right here. These are candle bodies. The candle body here respects it right here, right here. And this junction point, look at that. All kinds of crazy. Right here, right here. Okay. All the way down to the wick low. All right. So that's basically what I wanted to show you. Now, for you newer viewers, you're like, what in the world is he talking about? I'm going to refer you to the next slide where I discuss in detail from June through August, August through October, October through December, whenever I did this video, about a week and a half, 2 weeks ago. Okay? I'm going to refer you to that video, which is right here. Check that out when you have some time, okay? Because I don't want to rehash all that stuff and be repetitive. All right, let's get on to the meat and potatoes of the presentation today. Yesterday, remember, I showed a slide from fellow YouTuber and Elliott Wave expert Yang Bai. I showed the bear case. Showed the bear case. And I also showed the bull case. But right now I'm showing you only the bear case. And then I showed you my rudimentary projections right there on the right-hand side. These blue arrows, 398 from Yang, and one of my lines also went straight to 398. I think that it's going for the 396 to 398 range, and that is, in that range somewhere, is your bull bear line. Okay? I think that's exactly where it's going. It has to fill that gap. It's got to fill that gap. I'm going to show you right now in the next slide. Okay, this may look kind of busy, so I'm going to have to explain some things. Let's first do the easy stuff. On December 14th, low was 396.41. December 15th high, 395.25. There's your gap. It's right here. It's right here. Okay? Got it? Right. So, that's the easy stuff. Now, this channel bottom goes back to right down here, October 13th low. That's the hive. This is the channel bottom. Okay? I'm still staying high level. I don't want to get into the details yet. This dashed line right here, this red dashed line, dot, 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 is the channel top that markets hit on Friday. Got it? Okay. These two extra lines, I have expanded the channel top now. See that? Here's one line, here's another line, here's the third line. This is now the channel top. When you look at all the points that they connect back to, it is perfect. There's perfect symmetry yet again. Okay? So I'm just going to mention that for now. So this middle line is the original channel top that we were tracking to as of yesterday, as of Friday's close. Okay? I have drawn 3 more levels. The channel top has been expanded. Okay, so this gray line up here is the former ascending channel. Remember that? We were talking about that in all of like November and December. November, December, we were tracking to this. This is the top, right? This is the 1213 CPI. Kiss the top perfectly to close out that trifecta. Well, it's not trifecta, but to close out the channel top. So this gray dash line at the bottom was the former old or original channel bottom. Remember, it goes back to the hive, and even we were talking about this in December. You know, it was coming below it, trying to come back up, trying to take it back, come back up. This is like the I think this was when the news from Japan came out. Remember, it just fell down, and then it came back up, tried to take the channel bottom again. Remember that? I remember that. Okay, so there's your original ascending channel, and then you have the original ascending channel here that goes down to the hive, down at the bottom, but now I have expanded the top to go up there. Okay, now that we got that orientation out of the way. Also, this descending gray dash line down here is the old channel descending channel that I was tracking to. We basically left this channel and made a left turn into this rising channel that we're in now. Okay, you follow me so far? That's what we did. We left this channel, made it a left turn into this rising channel. Okay? Now, look closely at this new channel top and the old channel bottom, and what I believe is the top that's set by the 1213 CPI peak in 2022. Look where they all converge. Right at 396-ish range, where the gap is. You gonna tell me that's coincidence? No way. No way. The markets planned that gap a long time ago. They probably planned it back in 2021. They planned it back in 2021 probably, because I think they're going back there to fill it. That's where you're going. And CPI is not going to stop you. And in the next slide, I'm going to show you why CPI is not going to stop you. SPY, when I say you, markets, market makers. Okay? So, let's look closely at this channel top in more specific detail. See, look at this. First of all, it's going obviously parallel with the hive, the bottom. Look at that. Kiss, kiss, kiss. Kiss, 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 kiss. You know, you can go down below the channel bottom. We saw that on Thursday. You guys saw that on Thursday. You went down below the hive. Then you pop back up, just like this. See? Below, boom, pop back up. Perfect, 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 perfect. Okay? Perfect. That's not coincidence. And the reason why I intentionally left in the original market, the original channel, rising channel from October through December, is so that you can kind of see, am I getting like the original channel mixed up with the new channel? No. Nope, I'm not getting it mixed up. Okay? Zoom out so you can see it again. See? This was the original up there. See that? It's tough to deny. You know, let's just look at the next level down. Kissed it. It's maybe some kind of resistance, but this kisses it perfectly. So let's keep on going. Let's have a look. Oh yeah, kissed it, kissed it. See how it's you know, it's respecting it. There, you know, there, and there. Okay? So, now let's talk scenarios. Old channel bottom, new channel top, 1213 wick high. Right here. All point to this area. All of it. That's this zone is showdown zone. This is the zone. Right? This is the zone. As you can see, it could pop up below 396, hit 398, and then fail, right? That's one possibility. Go up, hit 398, and then fail and then come crashing down. That's one scenario. Or it could fill the gap that it left right here. See, I intentionally tried to put it spatially at roughly the same. See, if you draw this gap over to the left, it fits perfectly. It fits perfectly with the channel top and with the old channel. Well, you know, old channel bottom is slightly below it. But look at this. This is the 1213 CPI wick high. Boom. That's exactly where the markets are going, in my opinion. That's where you're going. And CPI next week ain't going to stop you. It ain't going to stop it. Nope. Nope, 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 nope. I don't think so. They've already made their decision where they're going to go, and by golly, that's where they're going. Now, once you hit that level, just keep in mind, guys. Okay, we all know when markets fill gaps, right? I just want to say the market makers know that we know once you fill a gap, your next inclination is to think, then go down. The market makers know that. Okay? You fill a gap and then go back down. Who's to say you fill the gap and then they keep going back up? Okay? That's what I'm saying. Because these extra gray lines up here are other data points that I'm drawing. But I said no, I'm gonna draw the top right here. I'm not gonna keep on going up. I'm drawing the top right here. But these other gray lines here also hit perfectly Data points. See? Kissed it. Kisses it. It just, they match up. See? Here. Here's resistance. You know, it, they all match up also. Just look at that. Kissed it. Kissed it. Kissed it. Kissed it. Time and time and time again, they're matching up. Okay? Even this wick, you can kind of barely see it. This is during the Great Fall. It still tried to come up. It kissed it. Right? So, and as you see here, these lines are not parallel with the original line. Right? Nope. So you see, that's what I'm saying. I don't know which way the markets are going to go, but what I am saying is this is the site of the shootout. This is the site of the shootout, is what I'm saying. I'll let you guys debate it amongst yourselves, up or down, sideways, whatever. I don't have a strong opinion about it. I'm just telling you that's where they're going, and that's where it's going to be settled. Okay? And I'm also going to say, when the markets don't intend for us to achieve a certain level, what they're going to do is just like this. This is a bunch of bull crap. Right here. This is the gray line. This is the gray line, the gray shaded lines, the gray shaded vertical lines are extended hours overnight. What do the markets do? Surge up, surge up, surge up, oh, and then they fall during extended hours too. Just like this. Just like this. Overnight. Gap up, surge up, oh, fall. So I will tell you to watch for that. When they pull some bull crap like that, when they pull BS like that, as we get closer to the site of the showdown, when you start pulling crap, like again here, during this green shaded area, gap up, shoot up, hit the channel top, fall down. They did all of this without our involvement intraday. They do all of this overnight, okay? So that's what you can expect to look for. As we get closer and closer to the site of the showdown, and the markets start pulling this BS, up, 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 overextended, futures are up, oh look, futures are up, way up. Then they're telling us, they're already signaling to us, they're going to dump it on us the next day. It's a pump and dump. That they're already signaling to us the next leg is lower. Okay? So don't ask me what I think it's going to do. I don't know. I'm only telling you this is the site of the showdown. This range right here. It's going to be, I think it's going to be between 396 to 398. I don't think it's going to be 394. It's going to be at or above this range. This is your range. That is the bull bear line. Okay? Feel free to debate it amongst yourselves in the comments. What do you think is going to happen? You know, I'm agnostic to either one. I'll be able to tell you what I think is going to do the morning of when we're at that range now. Okay, then I'll be able to tell you, ooh, I think it's going to go down. Okay? But I won't be able to tell you before then. So don't ask. Okay? Now, yeah, that's basically what I wanted to show you. Okay, next slide. Okay. Oh, this is important, guys. This is why I think CPI on Thursday will come in favorable and the markets are going to surge. Look at this article that actually 14 hours ago. Markets call the Fed's bluff after downbeat data. We're starting to see divergence. Meaning, so the markets are going up even though, the Fed keeps talking tough. That's what they're saying here when we're starting to see divergence. And it was highly evident in the responses to this week's various economic reports. All right, let's check this out down here. The jobs, the monthly jobs showed slower wage growth and Last month's wage data was revised sharply lower. Slower wage growth, sharply lower revision. What does that mean? Wages. Every single one of these CPI components, every single one of these are affected by wages. Ha 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 ha. Every single one of these components. Okay? So keep that in mind. Wages are slowing down, and last month's wage was revised sharply lower. CPI, therefore, must come down. Okay? Now, and right here, if wages aren't accelerating, it's one less inflationary concern for the Fed. Okay? That's true, because it affects every single one of the CPI components. 90 minutes later, a separate report showed massively unexpected weakness in the services sector. Services sector. Massively unexpected weakness. Okay, so if that report came out on Friday, then it has to be incorporated in the CPI number next Thursday, right? People are going to be like, dude, what do you... They're going to call the people out on that. It's like, well, wait a second. If the services sector showed massive unexpected weakness last week, and now you're going to say, you see what I'm saying? The CPI, they're gonna break down the CPI numbers, and you're going to see goods and services go plummet. And you're also going to see all of these should go down to some degree because wage growth is slowing. And in fact, wage data was massively revised down. Okay? So, also want to bring this to your attention. You guys are seeing this? Layoffs, 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 layoffs. McDonald's, that one caught my attention. Layoffs are coming. McDonald's? Oh, that's interesting. Okay. So, people are getting laid off. You getting laid off, you think you're going to be messing around with recreation? Right? You think you're going to go out and buy that new suit and tie? I don't even have a job. Right? Are you planning on buying a new house when you don't have a job? I don't think you qualify. Let alone, not only do you not have income, you don't have, the interest rate's like 8% now, right? The Fed's increasing the interest rates. Okay? So, think about how that impacts CPI. Layoffs, layoffs, layoffs. Layoffs are sweeping corporate America. You saw Amazon, 18,000 roles. Goodbye. Okay? That means less spending on goods and services, which are already showing significant weakness. Right? Sharply lower. Massive unexpected weakness. Services sector. Okay? So, now, one final thing I think is just more of a general friendly reminder. You guys know that this is true. Hold on a second. Let me. There you go. Markets are forward looking. Markets have already priced in a recession and have now begun to price in a potential recovery, especially when the data suggests more mild recession. And down here, old Bullard, James Bullard of the Fed. Soft landing is rising. The prospect of a soft landing is rising. You guys, the markets have already priced in what's coming on Thursday, CPI. And I've just shown you a lot of data that says, oh yeah, CPI is going to go down. And now you got Fed official James Bullard. He's a traditional hawk. He's not a dove. Now he's saying, well, yeah, the prospects of a soft landing are rising. So, you guys, what I'm saying is, by the time I show all of this to you guys, and by the time you and I get these news, markets already knew about it. They're already looking forward to June. June, 6 months from now. They already know the answer to the CPI. And they already know exactly where they're going to go. So, that's why I'm just showing you all this, because I don't think CPI is going to be a deterrent for the markets at all. Okay? So, Feel free to follow me on Twitter where I give real-time tweets intraday. And as a friendly public service announcement, please listen to your favorite song while you're trading because it helps you get into the proper state of mind or flow state. Okay, get into the zone, get into your flow. Please give this video a like, share, subscribe, or click to be notified when I release something new. And with that, I'm Agent 000 signing off.